Over 10 billion stock option contracts were traded on US companies in 2022, breaking the all-time record. Yes, that's billion with a B. As more retail traders enter the market, this brings more volatility and uncertainty. And this means more people are losing money because they flat out don't know what they're doing, especially when it comes to stock option investing. You might be wondering if it's a good time to throw your hat in the ring and start investing, but you're probably worried about losing money, right? You're not the only one, and that's why in this video, you're going to get the top 5 options trading mistakes that you're likely to make. Plus, at the end of the video, you're going to get my 3-step framework for making sure you don't blow up your account in 2023. If you're like most traders, you want to hit the ground running and start making money as soon as you start trading, but that is the wrong approach to stock investing and options trading in general. You first need to understand what you're investing in, why it has value, and why it has value to you before making any kind of trade. Many new traders open their account, put some money in, and then make a few trades and start telling their friends about the big trip they're going to take to Vegas with all the profit they're going to make in a couple of weeks. Optimism's great, but it gets you killed in the stock market. You need to have a plan, and you need to work that plan in your trades. Otherwise, you're going to become part of the 95% of traders who lose money and have your cash swept away. It should go without saying, but people are stupid, not you, but people. If you're going to trade stock options, you need to know how stock option contracts actually work. You have no excuse. There are paper trading accounts where you can practice trades for free with zero risk, and the inner workings of option contracts are explained to you. Yet time and again, people get run over and get burnt by buying a call when they should have sold, or selling a put when they should have bought, or some combination of the two. If you don't know what I'm talking about right now, it means that you don't understand options trading enough to go ahead and get started. So if you want to know, check out this video right here. It explains everything you need to know about stock options at the beginner level. If you keep your head in the sand, you will blow up your account. So don't come crying to me when you lose money because you weren't educated enough. Now, assuming you pick good companies and understand how stock options contracts work, the next thing you need is a defined entry and exit target for every single trade. Think of this as your research into the trade. You need to think about this shit. You wouldn't just go buy a car on a whim, so why would you throw your money in the market without thinking about it first? It makes no sense, and having a plan is necessary for when the trade is active. Good traders, they track everything. Bad traders or beginners, they track nothing, and they get their accounts run over. So to make it easy for you, there's a spreadsheet in the description of this video where you can use to track your trades. You can get a copy of it for free. Treat your investing like a business because what gets measured gets managed. So once you have an active trade because you have a defined entry and exit point, the next thing you need to do is attach a profit taker and a stop loss to your trade. This will allow you to automatically cash in on the winners and limit the loss on the losing trades without having to think about it at all. You did the planning when you set your entry and exit positions before making the trade. Now do the proper risk management and automate your closeouts on the upside and downside. Beginners tend to cut their winners short and let their losses run, which isn't a recipe for long-term success when it comes to trading. And one of the biggest mistakes options traders make that blow up accounts is getting too emotional. It's hard to lose money, and most people suck at it. I did for a long time, but when you try to revenge trade and make up your losses in one big ticket trade, 99% of the time, you're going to dig yourself a bigger hole and lose more money. Getting emotional means getting wrecked in the stock market. The quicker you can learn to take those L's, the better equipped you will be to win out over the long term. So my framework for making sure you don't blow up your account looks like this. There are 3 key things to focus on. Number 1, picking good companies. If you trade stocks that are blue chip and have a track record of success, which means they make money consistently, they have a large cash reserve to handle downturns, and they have an excellent management team, those 3 keys, they will remove a significant amount of risk from your investing. I like to stick to companies part of the S&P 500, and fortunes have been made by keeping it simple and not venturing out into the abyss of penny stocks and the next up and comers. You need to size your trading positions properly according to your account. If you have a $10,000 account, you cannot trade the same way as somebody with a $1 million account. It makes 0 sense. A good rule of thumb here is to limit each trade to 1% of your entire account size as a beginner and scale up from there. If any trade you make is above 5% of your entire portfolio, things are getting risky in my opinion. And the third part of my framework is keeping a long-term view of your investing. When you think about the returns you get over decades versus days, the emotional attachment you have to winning or losing trades will disappear and you'll become a better trader because of it. It's about getting rich for sure, which only happens over the long term with discipline and persistence. I hope you feel more confident now going into your trading in 2023. Don't let these mistakes punch you in the face or blow up your account. Follow my framework, keep things simple, and always keep investing in yourself to give yourself the best possible chance to make winning trades. If you want to know more about stock investing, options trading, or how I trade, I suggest you subscribe to my channel and follow along. New content is released every Monday, Wednesday, Friday. Thanks for watching this video, and I'll catch you on the next one.